Why US stock market is bearish? This video will highlight the main contributors why US stock market is down for the first half of 2022. There are two main contributors. Inflation rate means the rate of increase in prices over a given period of time. It reduces the purchasing power of each currency. This also indicates the cost of living is rising. Then, Fed funds rate. Basically, this is an interest rate. This determines how much the cost of borrowing. Let's start with US inflation. US inflation hits a 40-year high of 8.6% as food, gas, and shelter costs rise. The yearly increase in inflation was up from the 8.3% increase in April and higher than economists had expected. Inflation is now running at a rate last seen in December 1981. The Federal Reserve meets next week and expected to once more raise interest rates as it struggled to tamp down rising prices. The current 8.6% inflation rate for the month of May 2022 is definitely alarming. This level of rate was last seen in December 1981, means this current rate is at an all-time high for this new decade. The latest consumer price index figures show that the cost of living increased by 1 percentage point from April and was a broad base, with the indexes for shelter, gasoline, and food being the largest contributors. Please take note that the largest contributors are shelter, gasoline, and food. Gas prices have been soaring across the US, approaching $5 a gallon this week, compared to $1.90 more than a year ago. According to the latest CPI report, the energy index rose 3.9% over the month, with the gasoline index rising 4.1%. Other major component indexes also increased. The food index rose 1.2% in May, as the food at home index increased 1.4%. Here in the Philippines, gasoline price soars tremendously compared in the last 6 months. US also experiencing the same thing as gas prices approaching $5 per gallon compared to $1.90 a year ago. Here is the complete data of US inflation rate for the month of May 2022. If you want to read the in-depth report, please visit tradingeconomics.com. As stated, annual inflation rate in the US unexpectedly accelerated to 8.6% in May of 2022, the highest since December 1981 and compared to market forecast of 8.3%. The table shows US inflation rate from June 21 to May 2022, ranging from 5.3% to 5.4% from June 2021 to September 2021. So it accelerated to 6.2% in October 21 and continued to increase per month until the end of 2021. January 2022 reached to 7.5% and still continued to increase until reaching the high of 8.6% for the month of May 2022. The roots of inflation are multi-pronged. Clogged supply chain are pushing up prices, while energy prices are rising due to decreased production, a situation aggravated by the Russian attack on Ukraine. A supply-demand mismatch in the labor market also is fueling much higher wages, which turn are leading to price increase. A lot of factors contribute to U.S. inflation. Number one, clogged supply chain. When we said clogged supply chain, this pertains to delays and shortage on all kinds of product. We experience delays, shortage of products and services, as well as productions, distributions into final users, primarily because of COVID-19 pandemic. Global economy is not prepared for this pandemic. Demand for different goods and services is at peak, but the supply is limited due to global restrictions related to COVID-19. No need for further elaborations about what is the effect of COVID-19 because each of us experienced it. Well, fast forward from 2020 COVID-19 global pandemic, around February 2022, the height of Russia-Ukraine war comes into realization. This war definitely creates global impact not only in Russia, Ukraine, US, Europe, but globally we experience the effect. The war contributed of what we experiencing high oil price. The stock market also affected, primarily of macroeconomic related issues that directly impact to publicly listed companies in the stock market. Further, when it comes to labor market, unemployment rate is still high, primarily due to the effect of pandemic. Everyone needs find job, wanting to have a higher wages, extra income to survive in pandemic. To control inflation, Fed raises rates by half a percentage point, the biggest hike in 2 decades to fight inflations. Federal fund rate, what this means. So this is the interest rate at which bank and other depository institutions lend money to each other, usually on overnight basis. You know, raising rates will affect millions of Americans, including home buyers, savers, and investors. Federal fund rate is used to control the supply of available funds and hence inflation and other interest rate. Raising the rate makes it more expensive to borrow that lower the supply of available money, which increases the short-term interest rates and help keep inflation in check. Lowering the rate has the opposite effect, bringing short-term interest rates down. Basically, in theory, inflation and interest rates are inverse relationship. When rates are low, inflations tend to rise. And when rates are high, inflation tends to fall. Here is the United States Fed fund rates. The Federal Reserve raised the target for the Fed fund rate by half a point to 0.75 to $1 during the May 2022 meeting, the second consecutive rate hike and the biggest rise in the borrowing cost since 2020, aiming to tackle soaring inflation. The central bank added that ongoing increase in the target range will be appropriate, with Chair Powell pointing to 50 BPS hike in the next couple of meetings. Well, the table shows U.S. Fed fund rate from 2014 to 2022. Way back 2015 to 2019, the Fed rate hikes. According to CNN News, the rate increase indicates that the U.S. economy no longer needs the Fed's crutches and consumer businesses can afford to pay more to borrow. Further, U.S. economy is in a good shape. Inflation rate is an acceptable level. Unemployment rate has fallen to 4.6%. It is at the lowest level since 2007. 2020 during pandemic, Fed cuts rates to zero as a response to COVID-19 crisis. Further, Federal Reserve bought $700 billion government and mortgage-related bond as part of their emergency action to protect the U.S. economy for the impact of COVID-19 crisis. The Fed fund rates is expected to increase as it projected to trend around 3.50% in 2023. Last Wednesday, June 15, the Federal Reserve raised the benchmark interest rate into 0.75 percentage point, the biggest increase since 1994. Okay, what is the relationship of interest rates, high inflations, and stock market? Raising interest rates is one way that the government uses to control or reduce inflation. Generally, if inflation rises, the government is forced to increase interest rates, and the cost of borrowing money tend to be expensive, making it difficult for companies to borrow money. This affects the present and future development of companies, especially publicly listed companies in the stock market. For companies, inflation rate, interest rates creates a significant effect. It makes cost of productions tend to high, both fixed and variable costs. This tends for the company to increase the price for their product and services. Please take note that when the price of goods and services is high, the consumer demand tends to decrease. In turn, the sales of certain business owner or company tend to decrease. So if you are publicly listed companies in the stock market, the decrease of net income, the net loss is significantly reflect to stock's price. Inflation tends the purchasing power of the consumer to decrease, less demand for goods and services. So, high inflation plus high interest rates creates a lower consumer demand, lower profit margin or net income for business companies tend to stock's price to fall. Then, macroeconomic issues such as interest rates and inflation, institutional investors tends to be conservative when it comes to investing in the stock market and other financial markets as they weigh the return of investment, reassessing the valuations and fundamentals of their investment. Most of the time, in reality, institutional investors already sell their position before the market turned into bearish. This creates heavy selling, in turn makes stock market tumble into bearish territory. Of course, they want to protect their capital fund, taking profit and position again when there is a buy signal opportunity. All of this are part of your risk management and investing strategy. Okay, what is the investing or trading plan? So, if you are a trader, don't trade, watch out mode. So this is a trading strategy. Moreover, this is a risk management to protect the capital fund. If you are a trend follower, trade only when the stock's price is above 20 moving average. Definitely you are familiar with that strategy. So when the price hits 20 MA or fall below 20 MA, definitely you are not trading anymore these stocks or you sell your positions. Later, I will show you some of US stocks in its current price as well as the level point of DJI and SP 500. So if you are a trader, you are also familiar when the benchmark index hits 50 MA, don't trade, especially if fall to 100 MA. but be attentive in price movements in 100 MA level. Watch for the sign of reversal. As experienced this market volatility, not to mention way back 2020, the market movement is very unpredicted. It is really hard to pinpoint the bottom. You know the feeling of akala mo mababa na pero may ibababa pa. I would like to share also this market volatility most of the time, the signs of confirmations to up the stock's price most of the time invalid. I know I will not mention the experience of other traders. I will mention myself na lang. Ang lakas maka-whipsaw. I experienced many times. Instead to gain, I incurred many losses. So if you are an investor, buy in a small quantity. Be a medium-term investor. Use fundamental analysis and technical analysis in stock selection. So this is a good time to buy. Macroeconomic uncertainties, Russia-Ukraine war, these are temporary. I mean, this is not forever. Same as we wished before during COVID-19 pandemic. And somehow we saw how US government tried to combat for different macroeconomic uncertainties. I recommend to buy in small quantities regularly. Buy a stock or companies that you are truly believe in and stand for the test of uncertainties. But we are not into blind investing. I highly suggest to use fundamental analysis to know the current and future valuations and use the technical analysis if the current price is a good buying entry. Your mindset is not for short term, but for medium term time frame. After a year or two, or I will sell what I bought today when the stock market is back to bullish level. So if you have an extra money that you will not use for the next few years, invest in US stock market today. Please bear in mind, we are not blind investor. This is the perfect time to read, research, and some analysis. What are the good buy stock in the US stock market? Please use fundamental and technical analysis in stock selection. Let's take a closer look to DJI and SP500. DJI, or Dow Jones Industrial Average, is price-weighted measurement stock market index of 30 prominent companies listed in the US stock market. So this stock index frequently used to gauge the overall performance of the US stock market. Here is the current level of DJI at 29,900. Down around 19% from its previous high. Here. That's around 19.68%. The last time we've seen this level was around January to February 2021. Okay, here. Horizontal line. Here. It's here. That's around January 2021. Let's take a look to GI indicator. Okay, technical analysis of the DGI, moving average, indicators are all in bearish. Short-term trend, downtrend. 1-year return, negative 13.99%. On the other hand, SPX or SP500, the Standard and Poor 500, or simply SP500. So this is a stock market index tracking the performance of 500 large companies listed on stock exchange in the US. The current level at around 3,600. So this kind of level was seen way back in January 2021. Here. So most likely like here. Here. This definitely down at least around 20. I think it's okay, down at least around 23.5% or to 24 from its previous high. Currently, let's see the technical indicators. Currently, the technical indicators, moving average, technical indicators are on bearish. 1-year return is around negative 15.87%. So that's a current level of DGI and SP500. Here are some US stocks and its current price. I'm using my own eToro account, virtual account. What's good about eToro platform? You have a room for virtual trading for trading practices. Anyway, most of the US stocks are here from its 52 weeks low. Let's say Pfizer, McDonald's, Twitter, Cisco, Intel, okay, Meta, Tesla, Zoom. Just imagine from $405 to $78.933. Moderna from 496.0 high to $115. We have Johnson & Johnson's, GE, BlackBerry, Disney. Just imagine $187.38 to $93.02.